I was recently asked to take a look at selling a cash secure put for Robinhood, the brokerage company, who's trading under the symbol HOOD, HOOD. So this request came in through my user community. So I said, yeah, well, sure, let's take a look. And it's for selling a cash secure put. Now, if you're not familiar with a cash secure put, basically what I'd be doing is telling the stock market that I'm willing to buy a stock at a certain price for a given time frame. Now, in the case of a cash secure put, I'm going to pick a price, or otherwise known as a strike price, that's below the current price. Now, if we take a look at HOOD, I've got the daily chart up right now, and you can see that it's currently trading right around $116 per share. So if I do a cash secure put, I'm going to pick a strike price. That's the price that I want to pay for those shares below what the current market price is. So maybe I'll pick $110, $111. I'll walk you through how I do that. But just so you get an understanding, I'm telling the stock market, yeah, I'm willing to buy 100 shares or one contract because one option contract requires 100 shares. So I'm willing to buy 100 shares of symbol HOOD or Robinhood, the Robinhood company, for let's say $111 per share. And I'm willing to do that over the next, say, 1 week, whatever the time frame is. So I basically get to pick the price that I want to pay and the time frame that I'm willing to keep this option open, right? So this is where I get to specify how long I make my offer good for. So I get to pick the expiration date. So selling a cash secure put has lots of advantages, right? I get to pick the price that I want for a stock that I want, because I wouldn't mind owning shares of HOOD. So I pick the price that I want, the price that I want to pay, which is going to be below the current market price. And I get to specify how long I want to make this offer good for. Now, today's Wednesday, November 19th. So if I wanted to, I could say this option for me to sell this cash secure put is only good for 2 more days, right? So the option would expire on Friday the 21st. And I could say for the next 2 days, my cash secure put offer, or this option that I'm selling, is good for 2 days, right? The expiration date is November the 21st. I'm willing to pay $111 per share. And in return for making this offer, right, I'm going to receive something known as the premium payment. And that's because for me to pay $111 per share and guarantee that, I need to take that money. So that's $111 times the 100 shares. So that's $11,100. I need to take that money and reserve it in my brokerage account, right? So because I'm guaranteeing that I'm going to buy those shares. And so I want to reserve it that in case somebody takes me up on my offer to sell me their 100 shares of $111, I've got the money already reserved, ready to go. So when they sell their shares to me, that's called an assignment. When those shares get assigned to me, I'll take that money that I have reserved and I'll use that money to buy those shares. Now, because I've reserved that money, right? It's reserved and I can't use it, I can't touch it. I want something in return for that. And that's what the premium payment is all about. That money that I set aside for the time period that I specify, let's say it's 2 days, right? This Friday, because I'm setting aside that money and I don't get to use it, I get something in return. And I want what's known as a premium payment. So now let's walk through this trade and I'll point out the different components that I've mentioned so that you get a better understanding of what I'm talking about. So let's take a look at the daily chart for HOOD. We can see the market price is right around $115, $116 per share. And it's trading right at the support level. I have a support level right around $114.91. So as we can see, the price is hovering right at that support level. And that's at the bottom of the Bollinger Band. And if we check the RSI, the Relative Strength Index, we can see the RSI is right at 38. So right now, there's 3 things that make this trade for selling a cash secure put very attractive for me, right? So number 1, I see the price trading right just above support level. So if history is any kind of indicator, we know that when the price reaches the support level, there's a tendency for the price not to drop below it and move higher. But there's no guarantee of that. But that support level is there for a reason. That basically shows that when the stock price reaches that level, chances are, there's lots of interest in the market, and so people start picking up shares. From the Bollinger Band, this is a financial mechanism that tells us about the price action being a standard deviation away from the average price. Prices drop either above or below the average price. We know that the price action tends to go back towards the average, and so because it's because the current price is so low on the Bollinger Band, there's some pressure to make this price go back up to that average price of $133 per share. And then lastly, with the relative strength index down around 38, we know that the shares are reaching an oversold condition. There may be some interest in the market to purchase shares, and if there's more interest or more demand, we know that as demand goes up, the price can go up as well. So using those three indicators, right, reaching support level and potentially moving higher, the price at the bottom of the Bollinger Band, and the tendency or the pressure to move the price back up to the average, and then the market demand where the stock is currently reaching an oversold condition, so there may be increased demand to buy more shares, thus driving the price higher. So with these factors in mind, let's go ahead and take a look at the option chain to determine where I might sell a cash secure put by picking the strike price and expiration date. So I've opened up my trading platform and I'm going to pick an expiration date of Friday, November the 21st, which is 2 days away. So this is a 2-day option trade. Now, based upon what we looked at in the chart, let's go back. We can see the price is right around 115. I've got a support at $114.91. I'm going to pick a strike price that's below the support level and the bottom of the Bollinger Band. And I see a secondary support right around $110.74. So I'm going to take a look at the option chain for Friday, November the 21st, with a strike price of either $111 or $110, which we can see here. And on the right-hand side, we can see the information about the different put options. Now with the $111 strike price, the bid and ask is $1.31 to $1.54, with the last trade occurring at $1.41 per share. And at the $110 strike price, the bid and ask is $112 and $124, with the last trade at $1.20. Now the delta value for a $110 strike price is 23, and I like that better than the delta of 26 for the $111 strike price. Now the delta value, that tells you how much the option price moves for every $1 that the share price moves. So as the share price moves $1, this option price will move 23 cents. Now as a shorthand, option traders also use this as a way to gauge the probability or potential for the share price to actually execute at this strike price for this option. So in this particular case, for a $110 strike price, there's a 23% chance that the market price will dip down low enough such that this option will get exercised. So I'm going to go ahead and use the $110 strike price and plug it into my cash secure put analyzer so we can determine the profitability to see if this trade even makes sense. So we're going to use the $110 strike price and a premium value of $1.19. So here's my cash secure put analyzer. This is for symbol HOOD with an expiration date of November the 21st. Now the strike price is $110 and the premium is $1.19 per share. Now with the market price right around $115, $116, we can see that here. I'm looking to sell a cash secure put for one contract or 100 shares. And with a November the 21st expiration date, that makes the length of this option contract 2 days. Now my strike price is $110, which means I need to reserve $11,000 in my account just in case those shares get assigned to me and I'm required to purchase those shares, right? So I'm going to purchase 100 shares at $110 per share, or I need $11,000 reserved in my account ready to go. Now, if those shares do get assigned to me and I buy them, I'll be getting them at a discount. Now, with the current price right around $115 or $116 per share, if I end up getting these shares assigned, I'm only going to pay $110 per share. So I get an immediate discount, roughly almost 5% off the current market price. So I'm getting the shares at a discount, basically the price that I want to pay. Now, for selling this cash secure put, I'm going to get paid a premium of $1.19 per share, which means there's 100 shares, so I'll get a total premium payment of $119. Now, that $119, based upon the $11,000 I have reserved in case the shares get assigned to me, that's a return on my investment of just over 1% for this 2-day option trade. So to sell this option, I would click on Trade Hood Options, and I'd be selling a cash secure put specifying an expiration date of November the 21st, and then using the $110 strike price. And here's where I would specify my premium payment of $1.19 per share. So that's what I would do to take a look and determine whether or not selling a cash secure put makes sense for symbol HOOD. I'd review the charts, check the price action plus the price history, review the option chain to find out which options are available and how much premium payments they're paying, and then perform a cash secure put analysis on the option itself to determine its profitability and if it really makes sense for me to sell this cash secure put option. I hope this session was helpful for you. If you want to see more trades just like this one, be sure to join my free community over at school.com/simpleoptiontrading. I'll leave a link in the description down below. I really enjoyed making this video. I hope you enjoyed it as well, and I hope to see you in the next one. Let's trade options.